So we're moving on to voluntary deductions. Taxes, as I've said before, won't be the only thing probably that you're withholding from somebody's paycheck. Somebody could, again, bond purchases are pretty rare, but health insurance is very common. They may also have money going into a credit union for car payment, or maybe they have an extra savings account. And it doesn't have to be a credit union, it could be a bank as well. They could have money withheld to go into their retirement, and they also may make charitable contributions. Quite often, companies will do like a United Way campaign, for example, and the employees will give a couple of dollars out of their paychecks all year long to go to the United Way. So here is an example of how we would calculate somebody's pay. We've got gross pay of $640. We've got the tax withholding that we had figured out previously for Mr. Ken, I don't remember his last name. We have 6.25% for Social Security, 1.45% for Medicare, and then insurance is deducted off of that. Whoops. And you have a net pay of $571.04. All right, so preparing payroll records, as I've said, really, really important. You should have a sort of a base record with all this person's contact information in it, all of, their W-2, all of their new hire paperwork, all of those things that you should be keeping. Because again, you are the custodian of these records and you may be audited and have to produce all of those things. You want to keep track of what you've paid these people, what they have earned year to date, and you want to hold on to those for several years. If the Department of Labor wants to come and audit your payroll records, you're going to have to produce those. If the IRS wants to audit your payroll records, you're going to have to produce those. You should keep copies of, or at least images of, and hopefully those come in your statement, of the paychecks or record of direct deposit. Having a payroll register is something that will show all of the comprehensive data for that pay period. So you will have like all your employees listed there, what the withholding was from each one of them, and it will be all on one spreadsheet. The earnings will be broken down into salaried, hourly, straight time, overtime, shift differential, all of those things on one large report or spreadsheet, and kept on a by pay period basis. So here is our payroll register. Again, regular time, overtime, total earnings, year to date, and then taxable earnings, unemployment compensation, which this is, and these are employer contributions over here. And we'll go into those a bit later, as it says discussed in Chapter 9. And then this is like the other end of this spreadsheet. So now this shows all the taxes taken out, again, United Way, health insurance, and then this shows the net pay and what check number it was. So what it doesn't show is the pay period that this applies to. Oh, no, here we go. I'm sorry. Weekend did not. Okay, so that was on the top of this one. So you definitely want to make sure that you label what pay period this payroll register applies to. So as I said, you can either give your employees a paper check or you can pay them by direct deposit. Direct deposit is, I don't know percentage wise how many employers use one or the other, but certainly the overwhelming preference is direct deposit if an employer is set up to do that. They don't want to deal with so-and-so that didn't come pick up their last paycheck. They want to they want to be able to get rid of those checks and not worry about what check got lost in the mail or somebody didn't cash it and now it's hanging out there for a really long time. So doing direct deposit immediately means that the money is out of the employer's hands and into the employee's hands. And so there's no later accounting for uncashed checks. employees are required to get a statement of earnings, also known as like a pay stub, basically. And it can be a voucher that if they're doing direct deposit, you kind of print out sort of a dummy check. It will probably say do not deposit or something like that. And then the lower half of that will be all of the withholdings and basically a mini payroll register for just that employee will appear on the stub. You can also just give them a printed out stub. Or if they're getting a paper check, then again, chances are you're using it. I have blank check stock here, as a matter of fact. So because I have software which actually prints the checks, I buy blank stock. So the check information goes up here, and I get a stub for the person that's being paid. I get a stub that I can keep also a copy of. So again, not only making sure that you've got a payroll record by pay period, you want to make sure that you have individual records by employee. And I have failed to mention up to this point that, again, most of the payroll processing these days is done by computer program. Anybody who is trying to do manual payroll for any more than maybe one employee is making their job way too hard, and the chances of making a mistake are way too great not to use the commercially available payroll software to run payroll or to hire a service. So again, an individual employee earnings record would show by pay period for that individual employee all of the earnings and withholding for that year. So we want to, again, make sure that not only do we have these payroll records, but how do we account for this within our company? How do we, what is the mechanism by which the debits and credits cause this person to get paid? And so the answer is that we are going to debit wage expense, and then between the end of the payroll period and when the person actually gets paid, because quite often there is a lag. You know, pay period ends maybe one Friday, and then that gives the payroll people an entire week to then pay people the following Friday. That week lag, we still owe people that money even though payday isn't till the following Friday. So we have to record a payroll liability for that paycheck until we actually pay it. And then when we actually pay them on payday, we debit then the payroll liability account and we credit cash to account for the cash going out. And here is our journal entry, and you can do this entirely by pay period. You don't have to break this down by employee because that would be a whole lot of individual journal entries. So you can lump the entire pay period together in one single journal entry. So let's look at what a payroll would look like. Let's just leave aside the holdback week. Let's just assume payroll ends on Friday. You got Susie in the payroll office who is scurrying around at the end of the day on Friday, is calculating everybody's paychecks, and they're all going to immediately go out to by direct deposit. Now we've got our debit to wages and salaries expense. We are going to credit cash for the net pay that's going out in the form of the actual check amounts. Meanwhile, these liabilities will stay in our liability account until we turn those over to the taxing authority or the United Way or wherever it is that they're going to go. And depending on the size of your payroll will depend on how frequently you actually have to transmit that payment. And again, this is just, you can pause this and read this, but this is basically just what I said in words instead of in pictures. Same thing there. Okay, so various methods for keeping records. The manual system, which again, if you've got more than one employee, bad idea. Even if you have one employee, still not a great idea. Um, I am my only employee. I pay for payroll software. It's not cheap, but I don't have to pay attention to every time the payroll tax tables get updated or that there's some sort of a change in a form. Software company takes care of that for me. I just download the updates and I can be sure that I am always working with the most up-to-date forms and tax tables. Um, so yeah, grossly inefficient to do this because lots of duplication of, multiple, you can't just, do the calculations and print various reports from that. You're manually creating reports. You can hire a payroll company, and whether or not it's worth it really depends on how many employees you have and what over a certain amount, it might actually be more cost effective to do it in-house. But hiring somebody, if you don't already have a bookkeeper on staff, to process payroll for 1 or 2 employees a week might not be cost effective either. So going with a company as well. And then computerizing it. If you're going to do it yourself, it is my recommendation. I won't talk about any particular software brands, but anything that has updates and you know that you're working with the most current versions of forms. And I would tell you that, when it's not just enough to be have these updated once a year. When the whole CARES Act legislation came around, that there were some ability of employers to defer payroll tax remittance, and that caused them to change Form 941, and that was something that hadn't undergone a change in quite some time. And then there we are, right smack in the middle of the year, they change a form, and it looks somewhat different than it did before. So again, as a business owner, most business owners have far more important things to do than to track the government changing records or changing forms, and making sure that you've got an electronic system is a more efficient way to do that. Um, and I think this is all kind of rudimentary, but sort of talks about um, you input the employee stuff into the computer and it spits out the payroll register, the check or the direct deposit, and an individual employee earning record. And that concludes the employee side of payroll.